I can hear you. Let's stop in the last class, please. Has someone put in a phone?
Structure.
Have we talked about key zones? I don't think we've talked about key zones.
No,
So
no,
that
sir.
structural,
Structural shift.
yeah,
I don't think I've
Structural.
told you that. Are you talking about change of character?
No, sir. We don't talk about it.
Please. When was the last class? Was last class not day for yesterday? How come you people cannot tell me specifically where we stopped? You people are paraphrasing.
yes, sir. The last class we saw that structural linguistics, but that last class it was based on questions. So you are just explaining much on the ranges for the guy that's asking questions. So, but we're literally
Yeah,
saying
I'm dealing on
ranges.
that. We've been dealing with we are still talking about the higher time frames, Abby. We've listed out the 5 maps, Abby. Maybe?
Yes, sir.
Yes, sir.
Yes, we have listed the 5 maps. We've listed out the 5 maps. We we have deliberated on ranges, Abby.
Yes.
We've deliberated on ranges. We've talked about premium and
And
discounts, right? Right.
yes, and sweep.
Whatsoever you know, I mean, so the fact that you people cannot give me a clear, should I start afresh? Should we start the class from afresh? I don't mind though, because people are not saying anything.
Yes, sir. The last class that we did, we saw that structural ranges, where you explain the premium and discount. So you explained about the cap of the class. So that was where we started from. But later, they just asked questions. So you did more on the question. We said this the following class we talk about zone in the following class.
I'll talk about more about what?
About zone in the following class.
Zones. We're meant to start with zones today, right?
Yes, sir.
Abi?
Yes. Yes, sir. Yes, sir.
That's what I was yeah. That's what I was saying. We have talked about the 5 maps. We have explained change of character and valid break of structure. Okay. So I've talked about reversal range. I've talked about continuational range, right? Shibi? Okay. Let's dive into today's class. Okay. First of all, um, please mute yourself. Thank you. I don't think you guys have submitted any assignment so far. And that's the problem. When was the last time I gave you guys an assignment?
You have not. That I'm aware of.
I have not, have you?
Yeah.
Okay. Please. The first assignment, I need you all to show me the 5 maps. The 5 maps. That's the first assignment. Second assignment, I need you guys to show me range, show me sub-range within the overall range, show me markets, not using the overall range, but using from the sub-range to calculate the 50% of the range. What is again? That's all. Show me the 5 maps. Then show me what I've taught you on ranges. Please, I beg you, and just know that this assignment is going to be the entrance to the next class. See, when you guys, I like a very hardworking student. I like a very hardworking student and student that pay attention to what I'm teaching. There's one of my private students, like literally, I call these guys to have class. back. Why do I normally call him? Number one is he's very hardworking. I give him assignments, he does it immediately. He just gives that energy of he's ready for growth. And just the advantage part, he's a fast learner. That's what I observe around him. So I just like both of us analyzing the markets, teaching him and every single thing. It gets me. And that's how it works, yeah. If you show me your interest, that you are very serious, I will take you serious. I'll take you serious. And even in the group, if you show me that you are very serious, I will be replying other people, but I'll take you more serious. I don't joke with people that are very serious and very focused. That's just me. I'm sorry if you find it offensive, but that's just me. If you are serious, I will ensure that that seriousness is not wasted. But I'm going to say this without even feeling apologetic about it. None of you have shown me even an atom of seriousness. None. Like nobody. Nobody. Like I'm shocked. Like this is the first time I'm having class and I'm the one that normally remind the students. I normally tag the students that it is 9 p.m. time for class. Like I am shocked. This is the first time it's happening. After this class, I have a class by 10, but I will push it to that 10:30, 10 or 11. But once it's 10 like this, they have already start contacting me. FZ, time for class. But this place, me, they remind them. I'm shocked. I'm shocked. I'm shocked. Even Princess self, I'm shocked. I thought Princess was serious. Okay. Let's continue. So in the previous class, we talked about the 5 maps. And we listed them. We said the first one is this guy. We have explained this guy. If there's any complication, because we use this guy to literally teach about market structure 101. That's what we use this guy to do. Then the next thing, we talked about this guy. We said this is the second map that you want to see. We called it, this is your structural range. This is what? Your candle range. Candle range. You say that these are the things you want to see in your higher time frame before you start thinking about what? About going into your intermediate time frame. That these are the things you want to see. Right? We said the third map is when we have consecutive sales candles. And we have this week. Market is going to target what? This particular high. This one market targets high. Let's say market retreat. Market is going to target this particular high. This map tells us about where the market is going to. Tells us about directional bias of the market. Another one we said is that we want to see structural range overlapping what? Candle what? Range. I'm going to say this high is what? Our target. Now, personally for me, just like I focus majorly on 2 pairs. Yes, I have about 4 pairs in my watch list, but there are 2 pairs I currently focus on back to back. And I've even advised that, you focus on those 2 pairs. I focus majorly on, you can choose to. I focus majorly on USD JPY. USD JPY is my major pair in the JPY pairs. I don't joke with it. I focus on gold. If there's anyone that I can add next is CAD JPY, then sometime I trade JP2225. But if you ask me what are the 2 pairs that we focus so much on currently, is USD JPY and gold. You get me? Yes, so that's it. Now the same thing in this particular maps, yeah. These maps, I focus majorly on this candle range and this one. You get me? That's where I major focus. Those 2. Yes, so I also focus on this number three, but these are the two major ones I look at very well. Okay, I'm just trying to pass the knowledge to us, so we'll be aware. Okay, let's continue. So we talked about these maps and we have explained about ranges. So today, this map tells us about where market is going to get to. You get me? Where market is going to. That's what this map begins to tell us about. Now, the thing here is that markets will not randomly just, start floating on the air like that. Market need to come into an order and purchase from that order into this side. It is not good for us to trade the candle range without mitigating on an order. So we want to see markets come into a key zone and does this, and we can purchase. Same way is good for every other map. We want to always see markets as a key zone. Key zone, what is not, for those that are already acquainted with key level, I'm not saying key level, I said key zones. You get me? Also, at this guide, key zones, key zones. So these key zones that we are made measuring of, we want to know what these key zones are. So there are about 5 major key zones, 4 to 5 major key zones that we have in the market, that I focus on in the market. So let's look at key zones. Now, first of all, the most important key zone, the first one is, so we'll be listing these key zones in hierarchy of how they are important, so, or calling them in respect to their strength. So the one that is very strong is FVG. You get me? Number 2 is key levels. Number 3 is blocks. Number 4 is old highs and old lows. You get me? So these key zones are where markets come into before markets buys, or where market come into before market what sell. So there are points markets react in a directional bias before what purchasing. Okay, you see, just like I told you already in the group now, they're already tagging me, they're already calling me for class. And that's just it, because I don't know why you guys don't score as well. So okay, let's continue. So we're looking at FVG. So what is FVG? FVG is, the full meaning of FVG is coffee ever lookup. So it is one of the most diagrammatic representation of market orders. What is order? Order is a point in the market where liquidity is found. You get me? It's a point in the market where liquidity is what's created. You get me? And markets use those orders to push up or down in structure. So fair value gap is that gap. So it represents itself by the gap between 3 candles. Okay. So for example, we have candle 1, we have candle 2, we have candle 3. So the gap between the eye, I've already taught you anatomy of candlestick, right? So the gap between candle 1, between the eye of candle 1 and the low of candle 3 is called your fair value gap. See, please pay attention to me and let's not frustrate ourselves. Yes, I mean, these are everything I will be teaching you in this mentorship is the only strategy I use. I don't have strategy 1, strategy 2. No, this is the only strategy I use. This is what makes me profitable. This is what I will teach you. This is what I will teach thousands of students that will come. That's just it. So please pay attention to me. In as much as we've not gotten into the intense part of the class, but just follow me suit. Okay? So let's continue. Jesus. Okay, so that gap is what is evident. So what do we expect? Expect that market is going to what? Come down into this market top here and go up. Now, what do you need to know about FVG? Now, let's say, for example, now we are zooming out in the gap. There are 3 most important parts of the gap that you must understand. The first part of the gap is called the surface. That is, this particular point is what? The surface of what? Of the fair value gap. You get me? The second part of it is called the threshold. The threshold, which is half of the fair value gap or 50% of the what? The fair value gap. It's called what? This point is called the FVG threshold. It's called 50% of what? The FVG. So we can say 50% of the FVG. This point is called surface. Surface of FVG. And we have this particular point which is called the depth. Now, why do we need to know about this? The reason why we need to know about this is because of if market comes and tap into the surface of an FVG, there's a probability that markets can still use that fair value gap again. You get me? And the market tap into the 50%, markets, it reduces the tendency of markets using that particular fair value gap again because of 50% of the FVG is one of the part of the FVG that is mostly used. You get me? But if market comes and takes out from the depth, probably market comes down, trigger from the depth and goes up. That fair value gap has been what? Has been used, and market will not be coming down here again. Please, this thing I said, is it confusing? Do you understand what I just said?
Yes, sir. You understand, sir? I understand.
Okay, let's continue. So this is fair value gap. Now, let me just skip the next one. We'll come back to it or can treat it last. That's the key level. Let's talk about blocks. Now, there are about 3 most important blocks that we have. We have the order block. We have the breaker block. We have the reclaimer block. Now, first of all, order block is the last buying candle before the sell in the bearish market, or the last selling candle before the buy in the bullish market. Now, let's say we have consecutive sales candle, or candle is selling, candle is going bearish, candle is going bearish. And all of a sudden, we have this like this, and market goes up, does something like this, goes up. Now, this candle, this last candle, is the order block. Now, first of all, it is important that it has a sweep, but this sweep is optional, but having a sweep make it strong. You know what a sweep is, right? Sweep is where market sweep the wick of this particular candle. Now, it is very important that it has an FVG. So this is the FVG of the block. And what do we want to see in the future? The market come into this particular block and what? And purchase from what? From here. Okay. Now, we have what we call a breaker block. But then, let's say we have something like this. I feel like as if we are taking this class slow, the ball. Or do you guys think we are fast or we are slow? Let me hear you guys' opinion.
Moderate.
Moderate. Okay. And that person?
We are moving at the right pace.
Okay. One more person.
We are moving well, sir.
Okay.
Moderate.
So let's continue. Good. Good. That's not this year. Okay, so you see we have market consecutive shells, and we have our other block around this guy, have FPG around, and definitely we're expecting market to come and purchase from here. But the next thing market did was that when market got here, market broke it down disrespectfully with body forcibly. You get me? Now what does it mean? It means that market disrespected or failed that other block. Now, a breaker block is a failed other block. You get me? So we expect that in the future, that other block that was failed, that was disrespected, market will now come and use it as a sell, tap on it, and sell it downward. You understand it? Now, if you ask, for example, there are several places we can find breaker blocks. That's the location of it. For example, we have something like this. Breaker block will be found around what? Around there. So this is a bearish market, and markets can just come this particular point as breaker block, this point and what? And dump. Now, another place breaker block can be found is probably we have a bullish market. You get me? And probably market changes the structure like this. So automatically, this point is a breaker block. Market can come using our sell. Now, mind you, I'm just using this as an example. I do not say that in structures like this, the markets will use only the breaker block. These points here will be another block. And there's a high tendency that instead of the breaker block, markets can come and use the other block. You get me? So I'm just showing you where the breaker block is found. So we are doing more of identification, because the first stage of my class is majorly on identify, just see it. Then the second stage of the class is understand it. Then the last part of my class is apply it. Those are the three major stages of what? Of my class. There are three major stages of what? Of my class. Okay. Do you understand this? Okay.
Yes, sir. Done.
So I'm more you identifying it. Okay, let's continue. So we know that a breaker block is a failed what? Order block. So a reclaimer block is what? A failed what? Breaker what? Block. Now, before someone begins to say that, oh, that means we must hit stop loss. No, that's not what it means. You get it? That's not what it means. You can only see a pending um one old or an old other breaker block or reclaimer block in the market. So it does not mean that, oh, you have to fail. No. Okay, so let's move on. Let's say we have something like this. Like this. And we have this other block that goes up. And we have it like this. And market comes and, failed that other block. So, sorry, my candles are not that clear. So instead of it to come and use it as a breaker block, it now fails it as well as a breaker block and goes into the upside. So that point, the future market came to reclaim that other block. That's why it's called reclaimer block. Purchase from here. Now, this is what it looks like as I zoom in. Probably you have a clear view. Now, it's simply head and shoulder. I don't like to stress. I don't like to stress people with. So it's simply head and what? Head and shoulder. Whereas in the SMC, it is called QML. You get Quasimodo, actually. Yes, and I will draw what it looks like. It means like this when we have something like this. These are general knowledge. These points here, like this. Yes, where markets come here and purchase from here. And that's the point of what? Reclaimer what? Reclaimer block. Now, first of all, reclaimer block is very important that it has an FVG. Now, the question is, FZ, where will the FVG be? The FVG will be in this point here. This part of the market. You get me? That's where the FVG will be, just like this now. Just like this now. Just like this candle here now. That FVG. So you can have it purchased from what? From here. So you can see that's what the reclaimer block look like. The breaker block will look like this. This guy. So you know where the FVG of the breaker block should be, right? That's this part. This is the reclaimer block. So the other block looks like this. We have it around us. Yeah. You understand it now? Please. Is there anyone that is confused about this? Is anyone that is confused about it? Please. Please, I'm waiting.
No, sir. No, sir.
Please, I'm begging you. do well to know that you paid $150 for this class, and the average bank worker does not receive such. So make sure you ask your questions.
Okay, so I have a question. So all the blocks literally must have averages from your explanation.
Now, first of all, there are scenarios where another block might not have an FVG. And those market conditions, it's less probability when another block does not have an FVG. But if that particular other block is at the invalidation zone, we can choose to use it like that. You get me? And now, for example, there's what we call order block transfer. Let's say we have something like this. And we have an order block like this. And there's no FVG. Markets immediately comes, around here. But there's an FVG along these 3 points like this. You can use this guy now. That's this candle now as the order block. From here like this. Your stop loss is here. Market entry. Pushes. You get me? Now, in some cases where this candle, this order block does not have an FVG, it can be traded. But note is a low probability. You get me? Please, I don't know if what I said.
Yes, I do.
Please repeat, I didn't get you.
Okay. I said the places where the order block does not have an FVG. You get me? And probably the candle next to it does not also have an FVG. I said that other block can be used, but notes is a low probability. But probably we see an FVG immediately. The other block does not have an FVG, but the FVG is immediately the candle that is next to it. That's called order block transfer. So our entry will be from this particular second candle. Then our stop loss is at this particular low of that guy. So we expect to enter market from here and purchase. Are you with me? Are you confused, sir? I can repeat myself.
So, sir, it doesn't make it not a valid trade, but it makes it like a low probability trade.
That's what I said.
Okay, sir. What if a fair value gap is, let me say, is above a region or the same level that is not really overlapping the point of reclaiming, but it's just above it? Can it be transferred from that particular level? Like, can the reclaimer block be transferred from that particular level to where the fair value gap is?
You cannot be shifting a reclaimer block because of FBG now. We have something like this now. This is the reclaimer block. You get me? Let's say that the reclaimer block does not have an FBG. You get me? It is still traded. What we are saying is that these blocks are of high probability when they have an FBG. We are not saying they cannot be traded. You get me? Because of most of the time they might not have an FBG, but there's something called remitigation. You get me? So markets might be trying to use them as a remitigation to purchase again. You understand? Now, in those scenarios, you are making me advance in things I want to teach you in the future. Well, let me say it. In those scenarios, when probably, when it comes to zones in higher time frame, they are mostly clear. You see your FVG clear, you see your key level clear, and the rest of it, higher time frame like daily. But when we begin to get this kind of zones that that has been mitigated before, and mostly from lower time frames and rest of it. But let's say you are trying to use a reclaimer block in a 30 minutes, and that reclaimer block does not have an FVG. You get me? Or the breaker block does not have an FVG. Or the other block does not have an FVG. Now, the reason why you can use that other block, still use that other block, is two purposes, two things that can make you use that other block. I'm just saying this thing in future, for future sake. Number one, liquidity is closer to it. Number two, that block, that place you are trying to use, synchronize with the higher time frame zone. So that place is the same point or closer to the higher time frame zone. I know this thing I said, and a lot of people don't understand. If you don't understand, just tell me so I can explain it.
Please come again. I didn't get the last one.
Well, no, that answer.
I didn't get it.
Now, let's not understand. Let's keep it so we'll get to lower time frame. One at a time. So when we get to lower time frame, since we don't need it right now. Okay. Alright. But when we talk about lower time frame, which is the third part of this class. Okay. So when we talk about this class, when we get to the lower time frame, we'll talk about it. Please permit me. When we get there, we can talk about it. But for now, let's not talk about it. So, we understand. Okay. Jesus.
Yeah, sorry, about the season.
No, not you. I can hear you now. Talk to me.
You said that the seasons that they are listed based on the hierarchy. So now I want to ask, the blocks as well, are they also, they have hierarchy?
I think you're not paying attention. When I got to blocks, I said that when we're done with FVG, I purposely said FVG is stronger. Then when I got to blocks, we're meant to treat key level immediately. But I said, okay, fine. Since I'm treating FVG, let me just treat blocks first. Let me jump to blocks. So I started touching about the entire blocks. Are you trying to say every blocks, when it comes to blocks, other block, reclaimer block, breaker block, no one is stronger than anyone. They are all blocks.
Okay, that's my question. Thank you.
Yeah. Those arguments that people normally make in the timeline, other block works more. The thing there is that you must understand where breaker block works. You must understand where other block now, breaker block, another block, they work well in a continuational range. You get me? That's where they work. Reclaimer block works well in a reversal range. That's just it. But I'm still going to talk about all of this, sure. Okay. So
Sorry,
please.
can I ask a question, please?
Yeah, definitely you can ask a question.
Okay. I just want to know because I was going through a chart. This FVG and other block, does it how will I put it now? Does it expire with time or does it get less valuable with time? Take for instance, there are some FVG you see. You know, in the next 6 months, the chart can get back to it. Okay, assuming it just runs through like in a sharp uptrend or downtrend, and maybe 6 months later or even a year later, will it still respect that fair value gap, or with time its effect becomes less effective?
Let me ask you a question. Let's say, for example, you place a demand for a very nice AMG, and you also place a demand for um um what other thing can I call it? Probably place a demand for a bag, and the bag came before the AMG. The AMG took time. Now, if the AMG did not come on time, does it mean that the AMG, since it's taking time to come, does it mean that it's no longer strong or effective as an AMG it is?
Yeah, I think in that case it's still strong, which means no matter how long it takes, it will still be respected. That's what you're saying in essence.
Now, that's what I'm trying to say. But then, markets, not every single FVG in the market is respected. Do you get me?
Okay.
Market respects FVG in alignment to its range, its current range. You get me? And it respects the FVG that is closer to liquidity. And first of all, we are not, I like to say this, I like putting this knowledge together. Can you repeat yourself? I like putting this knowledge to I like putting this knowledge to everybody. You are not a magician. You get me? You are an analyst and you are a speculator. So you begin to wait for market to react. So, for example, now, that's why we don't just preach just everything. Every single thing at confluence is towards what we're about to do in the market. What is confluence? Confluence is adding two or more things in the market to know where market is going to, or add two or more things to know how market will go to where it's going, or add two or more things to know when market is going to go to where it's about to go to. So that's confluence. So that's why you cannot just come and say, oh, I see FBG. Probably, I see FBG. And you're like, this is an FBG opening. This is also an FBG. This is also an FBG. All of them are FBG. FBG, FBG, FVG. Yes. A market start retracing. You cannot just say, oh, FVG. Immediately, you enter markets and probably put your stop loss around it. And you want to sell from here. That's you becoming a joker. It doesn't work like that. You get me? So there are other confluences to know, oh, whether it is this FVG that will work, or whether it is this FVG that will work, whether it is this one that will work. And as you begin to digress into time in this teaching, you begin to realize those particular stuff. So let's just keep identifying. I know that there is this, how will I put it? This unease that as you identify, you want to quickly understand. As you understand, you want to quickly apply because of your brain like getting to the end product of a matter. It does not like taking bit by bit. But I will tell you that the best way of learning is to take it bit by bit. So right now we are identifying, because most of the questions most of you are asking are not even questions that comes from identifying what I'm showing you. They are questions that comes from trying to know how can this thing I identify, how can it be applied. I'm trying to tell you to calm down. Every single questions will be answered, but now we are trying to know them. So my major business now is, you see another block, can you call this another block? If you see an FVG, can you call this an FVG? If you see a breaker block, can you call this a breaker block? that is it. If you see reclaimer block, can you call this a reclaimer block? If you see a breaker block, can you call this a breaker block? That is my major focus in this now. She gets me.
Yes,
Yes,
I
sir.
do.
Okay, so let's continue. Okay, so the next thing we want to look at, but we are going to stop here. We are meant to look at key level. I don't want key level to be an uninterrupted class, but because of key level is a very important topic. It's a very important topic. So we are going to stop here, and in the next class we are going to look at key levels. Key levels in the next class. So please, this is what I need you to do for me. I showed you the map. I've showed you the map, right? So first of all, this is structural range. Show me where market reacted from an FVG and go up. Show me this. Where markets use any of the blocks and go up in daily time frame. Or in this candle range, show me where markets use an FVG and what a sweep and go up. The same thing for other maps and the same thing for other key zones that I've taught. FVG and blocks. That's what I taught today. So show me in the daily time frame where markets use in the candle range using the block as an additional confluence for directional bias. In a structural range using the blocks or FVG. You know what I'm talking about. So that's just it. So in the next class, we are going to touch chart work and we're going to talk about key levels. And we'll round up with
All right.
old lows.
Okay. Please, sir, I have a question.
Okay.
All right. Concerning one of the maps that you talk about consecutive candles before a sleep, how many candles will I see like before calling it consecutive? Must it be three? Like must it be from three and above?
Oh my God. But this thing is, I feel like it's not, I don't think it's an English problem. Well, I said consecutive cells. I never placed numbers to it. Why are you placing number on it? Just consecutive cells.
Okay. The reason for which I'm asking that is because there is this particular point in market that I saw two consecutive sell candles. But then after the sweep, the market didn't go up to take the
See,
highest point of
when we get,
that.
wait, calm down. When we get to intermediate time frame, that question you're about to ask, we will solve it. You get me? We will solve it. That question you're about to ask. That's why if I give you an assignment, I'm giving you an assignment from. If I give you an assignment, I'm trying to tell you, oh, show me where it works. Show me where it fails as well. You get it? So when you begin to see where it fails, those failing that you are seeing is also a lesson for the next class. So the next class, when we get to the next part of the class, is going to explain to you why this one failed and how to avoid it. You understand?
Yes, sir.
Um,
The DM or in the group. I don't think they are kind of
I think most of you are using headsets.
so please, this assignment you gave us, should we just do it on the daily time frame or we can use other time frame?